Elon Musk's artificial intelligence startup xAI, or X.AI, is reportedly in advanced discussions to raise approximately $15 billion in new equity financing, according to a Wall Street Journal report citing people familiar with the negotiations. The round is expected to value the company at around $230 billion, marking one of the largest private fundraising efforts in the AI sector to date. The report notes that Musk's longtime wealth manager, Birchall, has been presenting the fundraising terms to prospective investors. However, it remains unclear whether the quoted valuation is pre money or post money, leaving some ambiguity around the company's fully diluted value. If completed, the deal would represent a dramatic leap from xAI's previously disclosed valuation of roughly $113 billion, which was established earlier this year following its merger with Musk's social platform, X. The implied doubling underscores how aggressively investors are pricing the company amid a global race to build and commercialize frontier AI systems. The numbers also build on reporting from earlier this week that xAI had secured about $10 billion in funding by September, pushing its valuation to roughly $200 billion at that time. Since then, an additional $5 billion of commitments has reportedly been secured, bringing the current round's total to the $15 billion now being discussed. Much of the new capital is expected to support xAI's massive AI infrastructure expansion, including the development of Colossus, a next generation supercomputer being constructed in Memphis, Tennessee. To support the project, xAI acquired a 1 million square foot property in the city earlier this year. In July, the company also raised $10 billion in a combination of debt and equity, including $2 billion from SpaceX, to partially finance the build out. On the product front, xAI recently launched Grok 4.1, the latest iteration of its AI assistant. Musk has touted the update as offering a significant increase in speed and quality compared to previous versions. The rollout is part of a broader push to strengthen xAI's competitive posture against industry leaders such as OpenAI's ChatGPT, Google's Gemini, and Microsoft's Copilot, as big tech firms continue battling for dominance in the rapidly evolving generative AI market. Overall, the potential $15 billion raise, if finalized, would cement xAI as one of the most heavily funded AI companies globally and signal that investor appetite for high end generative AI infrastructure shows little sign of slowing down.
Okay, so one thing we saw there on, according to CNBC, is that this is a Series E funding. Series E funding, you can see that Series E round. So what this is indicating is that, amongst other things, that maybe, this is the final stage of its expansion efforts, or maybe preparing for an IPO, or making strategic acquisitions, or entering new markets, or addressing unmet capital needs. You know, so investors in this round are typically late stage venture capital firms, private equity firms that invest large sums to come into companies with proven growth and strong market positions. Okay, I think Grok through, or rather xAI through Grok is competing there. They are looking for a clear exit strategy, such as an IPO or acquisition. You can see that. So IPO is there, exit strategy is there. Something is on the offing there. Something is brewing there by going by what has happened now. Okay. By the time a company reaches this sort of stage, it is well established. Okay. Often with high valuations, strong revenue data, and a strong, or rather a solid management team. Okay. Okay, in terms of age, I don't exactly. Maybe it hasn't really. Some might argue that it hasn't really matured enough. Maybe some might argue that way. Okay, milestones. Reaching Series E signifies that a company has successfully navigated multiple funding rounds and is mature, is a mature business preparing for a significant liquidity event or large scale growth. Okay, while it indicates a successful growth trajectory, the need for a Series E round can sometimes signal that earlier funding rounds were insufficient, or that the company still needs capital to remain private longer or meet expectations. So it's a mix of things, even though it's sounding like maybe it could be that an IPO is possible, but if the company still needs funding, then it may have to be. I mean, I think nothing really stops it from still being another series of funding. It could be a Series E funding, is E1, E or EX. So, but some might be asking, what of convertible bonds? What about them? So those are usually used in the early rounds for seeding and Series A rounds. They are used to defer the company's valuation. But I think one might even argue that you know who says they can't use convertible bonds at later stages. But this Series E funding through the instruments involved in this are preferred stocks. Preferred stocks. That's the instruments that are used at this in this usually in the Series E funding. But like I indicated earlier on, I guess people might decide to use other instruments. The reason I'm talking about other instruments is because um, the convertible bonds, they come with options. They come with options, and you may also like to have your company easily optionable. The stock of your company easily optionable. So I guess at some stage, many companies, especially the prominent ones about, they they have gone through this funding stage. They usually use, maybe they begin with convertible notes and bonds, so that optionality might exist, being that it will be useful when the company goes public. The options available. Outside that, warrants are available as well. Warrants are a form of options that the company can issue. But for some reason they are not as readily available, like options. They're not as readily available like options, but they're pretty much the same sort of thing. But I think companies may prefer them, warrants, because they are in control of them. They can issue them. Companies usually don't automatically or directly issue options. Options, but they come in directly, and I think it's done by other parties. You know, of course, other parties that have, maybe there are intermediaries between creditors and creditors to the company, or and the company, and stuff like that. So yeah, so that's what's going on right now. Just see what you make of all of these, and thank you very much for watching this video.